Good morning, everyone. Can you hear me behind? Can you all hear me? Yes? All right, great. Welcome to the SIAS Investment Week, and I'm here to present to you about investing in Forex. Let me just have a show of hands. How many of you have ever invested in the Forex market before? Okay. How many of you have never invested in the Forex market before? You tell yourself, educate first before you invest. All right, very good. Now, this being a morning session, some of you might be tired and all that, so can we make this session a bit interactive? Is it possible? To make it a bit interactive, sometimes I will not complete my sentence, right? So when I don't complete my sentence, please complete my sentence with a bit more life, please. Okay, let's do this one more time. When I don't complete my sentence, please complete my sentence. Thank you very much. And also, sometimes I might ask questions. There's no such thing as wrong answers. There are only good answers and better answers. All right? So feel free to answer. And sometimes I might ask you to repeat what I... That's right. When you repeat what I say, you'll be learning a lot more. Okay. Now, whenever we invest in the stock market or any kind of instruments, what is the main concern? One of the main fear is what? Is there going to be a recession coming along the way? Right? That is the main concern. So, towards the end of last year and even this year, people were talking about what? They were talking about the Eurozone. Is it going to collapse? The Eurozone recession, is it going to deepen? Is the US going to hit the fiscal cliff? China's economy, is it going to continue to contract? And last year, December, what was everyone saying? Is it going to be the end of the world, right? So there's always fear, right? When we are investing in the stock market and we are wondering, you know, how can we successfully invest? Now, many of us, we do our financial plan. And what happens to our financial plan when a recession comes about? It gets disrupted, right? The financial plan gets disrupted. And we are conditioned to think that it is beyond our control, right? We plan, but once in a few years, a recession comes about, and hence we are not going to make money in the stock market or any other instruments. And so we claim, was it a good year? Yes, it was. Why? Because it was a bull market, so I made money. Was it a bad year? Oh, yes, it's a bad year because recession, no bonus. And so the stock market was bad. So what happens is your financial destiny is dependent on something that is external to you, right? But what we need to do, we need to change that completely. And how can we change that? We change that by ensuring that we are in control of our financial destiny. Whether the market goes up or the market goes down, you can still make money, right? And that's why I would like to present to you the business of trading Forex, right? And it's a recession-proof business. Why? Because there's no such thing as bull market in the Forex market. There is no such thing as a bear market in the Forex market. Up does not mean good. Down does not mean bad in the Forex market. So when you run the business of trading Forex as a form of business, you can make money in either direction that the market goes, right? So let me just introduce a bit to you. First and foremost, as I said, you can profit both in a bull run and in a bear market. It's a recession-proof business. It's the largest financial market in the world, trading daily volume of US $3 trillion. High liquidity, and it's got high volatility. What does it mean by high volatility? That means it goes up and comes down quite fast. Is that good? Yes or no? It's good. Is it risky? Yes or no? Yes, it's risky. But risk is associated to your financial education. If you're financially not educated, even investing in blue chips can be very, very risky. Say, for example, you decide to buy Capital Land at $4. Bam! Now it's $3.50. So it can be risky if you are not financially educated. But if you are financially educated, what may be seen as risky to other people may be very safe to you because you know what you are doing, right? Next. Now, some of the commonly traded pairs in the Forex market. These are some of the commonly traded pairs, and one of them is Let me get the markers there, don't mind. One of them is the EURUSD. That's the most commonly traded pair. Now, so what will happen when you have the EURUSD? There will be a price associated to it. For example, the price currently right now is about 1.3000. Now, what does this mean? This means for every euro, you can get 1.3 US dollars. Now, is this stagnant? Is this going to be stagnant? Yes or no? No, it is not stagnant, right? It's going to move up, it's going to come down. Going to move up, come down, going to move up, and it's going to go up, right? So it's going to be very volatile. It's going to be moving all the way. So some people say, so how do I trade if it keeps moving this way? It depends on your lifestyle. It depends on how you want to trade, because there are different time frames you can trade on when you trade the currency. First, you can trade over a few days. Next, you can trade over a few hours. You can trade within an hour. You can trade within 30 minutes. You can trade even in 10 minutes. Right? So depending on your lifestyle, you choose the trading system that you are most comfortable with. So some people, they want to trade over the long term. So what they do? Maybe they enter here, and then they buy here, and then they sell here. That can be the long term. Some people, within a few hours, they can buy here, and then they sell off here. Right? But what you got to realize is it is moving in trends. Like for example, this you can consider it as a uptrend. Everybody say uptrend. Thank you. This you can consider it as a downtrend. Everybody say downtrend. Downtrend. So you try to capture the trends, right? So the interesting thing about a Forex market, you can go in and you can sell first, and then you buy back later, right? Unlike the stock market in Singapore especially, you can only buy and then you sell. If you sell and you buy in Singapore, you must do it within the same day, or else you have to have an expensive T with SGX, right? So, in the Forex market, you can buy first and then sell later, or you can sell first and then buy back later. So people get a bit confused. So we say, when you buy, you say you enter long, right? And when you sell, we say you exit the position, right? So when you sell first, what do? You are what we call, you enter short, and then you can exit the position. Follow? Okay, good. Now, so when you enter long here, how many possible outcomes are there? How many possible outcomes are there? Two possible outcomes. It either goes in your favor or it goes against your favor. So any trade, there are only two possible outcomes. It's either in your favor or it's against your favor. So you know, as a systematic trader, you know, when you enter long, you go up, you take profits. When you come down, you cut your losses, right? Or when you sell, that means you enter short. You go down, you take profit. When it goes up, you cut loss. So you see, there's no such thing as up is good in the Forex market and down is bad in the Forex market. It depends on the position that you take, right? So this is the possible outcome for any trade. So if you want to run the business of trading Forex as a systematic, legitimate business, then what is your approach? Your approach should be, you must have a systematic approach, knowing when to enter long, when to enter short. Now, when you lose, you must ensure you lose a small, predetermined fixed amount, right? And when you win a bigger amount. So, by doing this way, and you have a statistical number of trades, say for example 100 trades, you can ensure that you will be a winner. Why? Because this is statistics. It is mathematical. It is no longer gambling. It is no longer just trying your luck. You know for sure, after a large number of trades, you will be a winner. Right? So you got to understand, in the business of trading Forex, there will be wins, there will be losses. But what you got to ensure is that your wins must more than cover your losses. Right? Now, so, in the business of trading Forex, first and foremost, you need minimal investment. How much do you need to start in the business of trading Forex? $1,000, can you start? Yes or no? Yes. $500, can you start? Yes. $250, can you start? Yes or no? Yes, you can also. So you can start with a very, very minimal amount. And then, it's unlike your traditional business. For your traditional business, right, you will need about 2 to 3 years for it to break even. Then you need to manage your employees. Then you need an office space or a shop space. Then you need to get your inventory. So it's going to cost you, a small setup is easily going to cost you about 50 to 100,000 itself. Right? So, whereas in the business of trading Forex, as I said earlier, your capital, it depends up to you, how much you want to start out with. And what do you need? You need about 1 to 2 hours a day to set aside so as to make the decision whether to take a trade or not. And what's interesting is there's this thing called the power of leverage. Now, what is leverage? Now, leverage enables you to use a small amount of money to trade a much larger position, right? That is leverage. Say, for example, Forex brokers give you 100 times leverage. It means with $1,000, you can trade a position of $100,000. This means you can more than double your amount that you put in, get more than 100% returns in a few weeks. So the question is this good? How many of you say this is good? How many of you say this is not good? Now, if you can double your account in a few weeks, what does it also mean? It also means that you can blow your account in a few weeks. Many of you might have read the newspapers or you've seen it on internet where people are saying, oh, I made 100%, 200% returns in a month. Have you come across that in trading Forex? Right? Now, the question is, can you make 100, 200% returns every month? The answer is no, you can't, right? This is not a get-rich-quick scheme. You want a get-rich-quick scheme, there's another place called a casino, right? Down there you can get rich quick and you can get broke quick also, right? But this, we want to run it as a sustainable business. If you want to run it as a sustainable business, some leverage is good. But if you use extensive leverage, you are playing it as a person who trades like a gambler, right? So you don't want to trade like a gambler. And this gambler who gets 100% returns, right? They will go in, they get 100% returns by using their maximum leverage 2-3 times, they get 100% returns, they're damn excited, but guess what will happen soon? They will blow their account, right? And then they will top up their account again. After they top up their account, then maybe they make another 100% returns, right? And then subsequently, they will blow their account again. It's just like a person who goes to a casino and he makes 200, 300% returns. Should you be happy for him? If your friend went to the casino and made 100, 200% returns, should you be happy for him? Yes or no? No. Why? Because it's statistically proven, if the person stays there long enough, he will definitely end up being a loser. For example, the simple game, the roulette, you know, the black and red, right? Black and red roulette. So you use the ball, it just falls onto one of them. Is it 50%? Winning success. You choose black and red. But guess what? There's just one green, right? Such that the game is in the favor of the casino. So if you stay there for a prolonged period of time, you will definitely end up being a loser. Do you understand? Right? So all the games in the casino are made in such a way. So if you want to trade your business, you cannot be using too much leverage when you trade your business, or Forex. But if you do, what will happen? You will double your account once in a while, then you blow your account. Then you top up again, you double your account, blow your account. You top up again, you double your account, you blow your account. At the end of the day, it's what? It's negative. But a typical gambler, would he remember that it's negative? No. What will he remember? He'll remember all the time he doubled the account. Just like a person who plays 4D, right? Every month he spends about $500, right, on 4D. Every month spends $500. In that year, once he struck $5,000. And he's so excited. Wow, I got $5,000. But is he a winner or is he a loser? He's a loser. Because he spent what? In a year, if he spent in a month, if he spends $500, in a year he had spent what? $6,000. But he got back $5,000 and he's so excited about it. That's a typical gambler mindset. But if you come in as a gambler, I will tell you, you're bound to lose money in the Forex market. You got to run it as a business. Just like you see Warren Buffett. Warren Buffett invests in stocks, but he runs it as a business. Donald Trump invests in properties, but he runs it as a business. So when you want to invest in the Forex market, you got to run it as a business. All right, very good. Now, question then, what should you be using? Should you be using fundamental analysis or should you be using technical analysis? How many of you say fundamental analysis? Fundamental analysis, that means you're looking at news. How many of you think you should be using fundamental analysis? How many of you think you should be using technical analysis? Okay. How many of you think you should be using a combination of both? Okay, question, can you make money using fundamental analysis? Yes or no? Can you make money using technical analysis? Yes or no? Can you make money using combination of both? Yes or no? Yes, okay. So, you can have some technical analysis, you can say, all right, this is an indicator here, you use RSI, you use MACD and various other indicators, and you tell yourself, okay, time to short the market here. And then when it goes down and you tell yourself, take profit here. So you become profitable using technical analysis. Or you say here, the EMA cross, so this is a buy signal. Or the candle traces to touch the EMA 20, so this is a buy signal. So you can say this is a buy signal, and then you go up and you sell. Right? So you can make profits. Or you don't use technical indicators at all, right? You can have a sell signal here, and it comes down, and you take profit. Or you can have a buy signal here, and it goes up, and you take profit. Right? So, the question is, do you use technical, fundamental, or both? How many of you say fundamental? How many of you say technical? How many of you say combination of both? Okay, question, can you make money using fundamental analysis? Yes or no? Can you make money using technical analysis? Yes or no? Can you make money using a combination of both? Yes or no? Okay, now the honest question. Can you lose money using fundamental analysis? Can you lose money using technical analysis? Can you lose money using a combination of both? Yes. And so, it is not the what that is important. It is the how, right? The how. How do I manage my risks? How do I compound my account to get higher returns? How do I do position sizing? Many people, they focus on the wrong thing. They focus on the what. The what is not the most important thing. It is the how. So let me highlight a few of the how that is important. Right? So you see this trade is done by Kyung Hee. Kyung Hee is our master trader. Right? And you see in his trade, there will be trades that he makes money and there will be trades that he loses money. These are audited statements, or else I cannot show it to you. Right? So, at the end of the day, he made money, but you got to understand, you will make money and you will lose money also. Okay? Now, so, what is the how? First and foremost, you must have your entry rules. Everybody say entry rules. Now, your entry rules must be high probability trade. High probability, you see, the Forex market, just like the stock market, is random most of the time, right? With pockets of predictability. You must be able to capture the pockets of predictability, right? That's what is important. And then, of course, your entry rule cannot be too stringent, such that you only have one trade in one entire month. It cannot be too relaxed also, such that you have 20 trades in one day. And next, what is important, you have an edge over the market. How do you have an edge over the market? You got to understand, while you are trading, there are millions of other people who are trading at the same time. What is it that's going to make you a winner and make the other guy a loser? It is not because you are more intelligent, you know. It is because you have developed a systematic approach and you discipline yourself to follow the approach. And since it's a systematic approach and you discipline yourself to follow the approach, you will ensure when you make large number of trades, you will become a winner. Now, next, your exit rules. You must have a profit target and you must have a stop loss level. Right? So, say for example, you enter long here. So, there must be a stop loss. Some people say, why put stop loss? Is it important to have a stop loss? Very important. Huh? There must be a stop loss. And then there must be a what? Take profit. Okay? So when this happens, you know your trade, it either hits your stop loss or it hits your take profit. So the question then is, how many percent of your trades should be winning trades? How many percent of your trades should be winning trades? I can't hear you. Someone, anyone? How many percent of your trades should be winning trades? What? 60%? What? What do you say, sir? 60%. 60% is a B4 in school, you know. You get all B4, cannot go JC, you know. Huh? You'll deal with it. Okay, now, question. Can you be a... Okay, if I have... If 90% of your trades are winning trades, would you be profitable? Yes or no? Yes? Okay. This is how the typical gambler, how he's going to trade. Why? Because winning feels good. Come on, it feels good to win, right? Yes. So the typical gambler, what is he going to do? Say, winning feels very good. So I enter here, I enter long here. And because I like to feel the winning, right, I'm going to put the take profit very close. This is the take profit. Say I put my take profits about, say I put it in dollar terms. Say I take my take profit, say every $10 or every $100 I take profit. Okay? Every $100 I take profit. Right? Why? Because it feels good to have money in the pocket. Feels good, right? So every $100 I take profit. But you know what? It does not feel good to lose. Right? Everyone don't want to lose. So I put my lose stop loss very far away. Right? So this will be my stop loss. Because why? I don't want it to hit what? Right? And I put my stop loss, say, about 300 pips away. That is $3,000 away. So what's going to happen if a person trades this way? What's going to happen? Every now and then, it's going to hit his take profit, and he feels good. Yeah, exciting. Goes down a bit and comes back. Yeah, pa, hit. Yeah, exciting. Then after go, pa, hit. Then goes down a bit. Oh, pa, hit again. Excited. Wow, money in the pocket. It feels good. But guess what? Every once in a while, what's going to happen? It's going to hit your stop loss. Right? And what happens when it hits your stop loss? Everything that you made is gone. So in fact, if you have 10 trades and 90% winning rate, right? 9 of them you win, $100, $100, $100, but 1 you lose. And when you lose, you lost $3,000. Guess what? At the end of the day, you still lose money, right? Now, next question. You got to realize you win because your winning trades more than cover your losses. And you lose because your losses are not able to cover your winning trades. So the question is, how many percent of trades do you need to have as winning trades? How many percent? If I have 50% winning trades, can I still be a winner? 50%, 50% is C6, That means you get everything C6, ITE for sure, Can you still be a winner, yes or no? The answer is, yes, you can. How? Let me show you. Right? So, say for example, you enter long here. Right? But every time you win, you make sure you win more than you lose. So when I win, I say I win, this is my take profit, I win 2,000. When I lose, this is my cut loss. I lose what? 1,000. Okay? 50% winning trades. Would I be a winner? Yes or no? The answer is definitely yes. Right? So, you'll be a winner. You see, you get 5 winning trades, 5 losing trades. At the end of the day, you'll still be a winner. Why? You have ensured that your wins are more than able to cover your losses. That's how you'll be a winner. Okay, so the first thing is you got to ensure that you got your entry rules in place. Next, you got your exit rules in place. Next, your risk control. Ensure when you lose only a small percentage of your account. So the way we trade is when it hits our stop loss, we only lose 3% of our account. Right? Of course, your stop loss must be away from the noise of the market. But at the same time, you got to ensure that you have proper risk management, such that when it hits your stop loss, it's only 3% of your account. How many percent? 3%. So if you put in $1,000, 3%, how much? How much? $30. Do you feel a pinch? No. Right? So you can emotionally detach yourself from the trade. All right? So, how do you do this? You do this by this thing called position sizing. Now you look at Kyung Hee's trade here. Every trade, the size of the trade is totally different. Right? The size of the trade is different. Why is the size of the trade different? Because at every trade, he's calculating 3% of his existing balance. Right? He only risks 3% of his existing balance, and with that, he calculates what his position size should be. Right? So you make sure there's no such thing as unexpected losses. You know exactly what you're going to lose if you lose, and you know that you're going to win a lot more when you win. So, when you run it as a business, you got a very systematic approach. First, you have your entry techniques. Next, you have your exit strategies. Entry techniques, make sure it's high probability trades and the odds are in your favor. Exit strategies, what is your stop loss? Not more than 3% of your capital. And what is your profit target? Profit target, at least 3% of your capital. Risk control, make sure there is a worthwhile return to risk ratio. So when you have this concrete decision-making process in place, you will have a powerful and profitable business plan. So what do you do on a daily basis then? So this is what you do. Whenever the market goes to a situation, you ask yourself, is this a high probability sell trade? And what do you take into consideration? High probability trade, What is my entry exit prices? Is there a low risk, high return potential? Then put your entry level, your stop loss, your profit target, and your risk to return ratio. And then you enter the order of the trade. Okay? So, say for example, this is a high probability trade. What do? First, what's your entry price? What's your stop loss? What's your profit target? What's your risk to return? And then you choose your currency pair. Choose your volume. Your volume will is determined by the 3% of your account, right? Then your type of order. Is it a buy order or is it a sell order? Next, at what price? Next, put your stop loss. Next, put your take profit. And then you place your order. Now, what do you do after you place your order? What do you do after you place your order? What? Look, stare. You think by staring, the price is going to move in your favor. And that's how many people waste a lot of time. Once you place the order, what is the possible outcome? Two possible outcomes. What's it? Either it hit your take profit or it hits your stop loss. So what should you do? Switch off your computer. Go and do something else. But I'll tell you that will be the most difficult part. Right? But that's what you should be doing. Right? Does not matter anymore. Okay? Now, I also like to highlight this other thing, the power of compounding. Many people talk about compounding, but they don't really know how to do compounding. But it's very powerful. Let me give you an example. Say, for example, you have a golf game, right? And every hole, you bet 10 cents. And every time, the second hole, you double it to 20 cents. Third hole, you double it to 40 cents. Next, you double it to 80 cents. Next, you double it to 160. By the time it reaches 18 holes, how much will it be? Wild guess, anyone? 18 holes. How much is it going to be? How many of you say $500? How many of you say $1,000? Hey, hello, raise your hand once. How many of you say $500? $1,000? $2,000? Okay, let's see what happens. Right? 6 hole, 7 hole, 8, 9, 10, 11, 12, 13, 14, 15. By the time you hit 16 hole, 3,000, 6,000, $13,000. Can you see? That is the power of compounding, right? So, if you take your account, say you're able to grow at just 10% monthly. 10% monthly, is it good or not? It's very good, right? 100% cannot be sustained. 10% can be sustained, right, in the Forex market. Now, so, without compounding, if it's uncompounded, in 20 months, your 10% will only grow to your 10,000 will only go to 34,000. But if you know how to do compounding, your 10,000 will grow to 98,000. Okay? That is the power of compounding. So this is what Kyung Hee applied, and let me share with you his statements once again. Right? So in the first month, in the month of November 2009, he started with an $100,000 account. So the first month, he made a return of 13%. Right? Next month, in December, he made a return of 14%. The account grew to 130,000. Next, by February, made a return of 10%. Account grew to 145,000. Next, by March, make a returns of 30,000, that is 21% returns. Account grew to 173,000. Next, the following month, made 25,000. Account grew by 14% to nearly 200,000. Right? Next, made about 43,000, but you see there will be winning trades and there will be losing trades for sure also, right? Account grew by 17%, right? How much? 233,000. By June 2010, account grew by another 29,000, right? How many percent return? 12% return. Account grew to 262,000. By July, made 59,000. Account grew for another 22%, grew to 322,000. Next, in August, made another 58,000. There will be winning trades, there will be losing trades, but ensure you win more than you lose, right? Grew by 18%. Next, September, 65,000. Account grew by 17% to 446,000. Now, next, 57,000 he made. Grew only by 13%, but account has grown to 500,000. So started with how much? 100,000. Grew to 500,000 within 1 year. Right? That is the power of compounding. That's the power of knowing how to do position sizing. So the account grew all the way. Do you think the account continued to grow? Yes or no? By the time February 1st, the account was already 1 million. Okay? March, 1.2 million. April, 1.4 million. April 2012. And by the time it was end of April 2012, it was nearly 1.5 million. Right? Nearly 1.5 million. So this is growing your account in a slow, sustainable manner, running it as a business, not doing it as a gambler, right? It's based on mathematics, it's based on statistics. So the master trainer, right, is Kyung Hee himself. Kyung Hee he's got a first-class honors degree in electrical engineering from NUS, chartered financial analyst, qualified member of Mensa with an IQ of more than 156. Actually, all that not very important already. What is important is he has developed a system that enables people to trade in a systematic manner, right? That's what is important. And he's been a full-time Forex trader for the last 10 years. Now, for this weekend and for the SIAS Investment Week, Kyung Hee has agreed to do a special course for all of you here, right? And this course will be held on this day, 17th April, right? That is this coming Wednesday. And it will be held between 7 p.m. to 10 p.m. at Adam Khoo Learning Technologies Group Training Center at Keppel Towers. And the fees is actually nominal, $19. In fact, with $19, we are giving away a book, a free book, right? Secrets of Foreign Millionaires. The book, the retail price of the book itself is $28 already. So in fact, we are giving you money, right? In addition to that, right, we are giving another book if you bring a friend for just $1, right? And your friend will receive this book. So in other words, by putting aside $20, you're going to get 2 books worth more than $50 for free. Now, the thing is that the room that we have is not this size. So we cannot accommodate everyone. We only have a capacity of 80 people, right? And so it's only those first 40 people who sign up. That means you are signing up for yourself and a friend, right? Only the first 40 people you get to get the place. So, besides that, we are also throwing in some other things. You get priority invitation to AKLTG educational workshops and seminars, free exclusive access to membership-only videos, including scenes from Wealth Expo 2012, featuring Chris Gardner and an all-star speaker lineup, discount and rebates from any of our in-house program, and you will also get an NTUC membership for 1 year, a limited period of time only because of our recent collaboration, right? So this is for the first 40 people who sign up because of our limited capacity, where you can sign up is you can go to our booth outside. Our registration booth is near the registration area, right? That's our booth. So for the first 40 people, you can get these places. So I'd like to thank you for your time. I hope I've presented to you something that can be done in a business that can be done in a very systematic manner, that you build your income over time. Very important, run your investments in a form of business, right? Don't run your investment as a gambler, or else you will end up losing big money. So learn to run your investments as a investor in a form of a business. With that, thank you very much, all right?
Thank you very much, ladies and gentlemen.